In this video, I will show you how to trade Elliott Waves in the most simplistic way with only basic knowledge necessary about Elliott Waves. Many people avoid Elliott Waves because there's a lot of rules and guidelines and it takes a long time to learn. However, with only basic knowledge, as I will show you in this video, you can be a very successful Elliott Wave trader. Now, if you have seen any of my previous updates on different markets here on the channel, you will know that I'm a very detailed Elliott Wave analyst. However, the foundation of my trading is what I'm going to show you in this particular video, which has to do with directional bias, which is what Elliott Waves can give you. It can give you a directional bias. Are the probabilities higher for price to move up or for price to move down? And we don't need a lot of detail in order to get those probabilities, in order to get that directional bias. Now, in this video, we will talk a bit about the local price action, but this is not a Bitcoin update. For the most recent update, just make sure you check out this recent video that I posted yesterday, as nothing has changed. So let's then jump into the chart. I'm going to start with the bear market and then I have a couple of examples in the bull market. And what I'm going to show you and teach you in this video can be implemented on any time frame, but generally I recommend to not go below the 15-minute time frame, right? So anything between the 15-minute and the higher time frames is fine. Now there's only two things that I want you to focus on. First of all, if price is moving very quickly to the up or the downside, you would expect price to create a bit of a range, bit of a grinding structure in that direction, and then you start looking for a reversal into the opposite direction, which can give you a great opportunity. More so if this grinding structure happens around a nice area of resistance. Same is of course true if price moves down, you wait for a range, wait for a bit of a grinding structure, usually a couple more lows, then a reversal, and even better if this happens right around an area of support. So now let's look at a couple of examples and you will quickly realize how easy this can be. So if we look at the bear market, you have this very steep structure in the middle of the bear market, also supported with a good amount of volume, which is generally what you see anyway when you have those very steep structures to both the up and the downside. But then you can see that price ranged sideways for a nice long period of time, which is exactly what we like to see. This is the beginning of that grinding structure. Quick move down, and then you start to move sideways. Generally, you still take the low once, twice, three times, but at least you got to be aware that this over here eventually leads to a bit of a retracement. It's not about sniping the exact low or sniping the exact high. It's about being aware that from an Elliott Wave point of view, with very basic knowledge, you are looking for a directional bias that is changing towards bullish, which means that here, right here, you can start looking for potential buying opportunities as price is creating that structure. Do you know this is the bear market low? No, you don't, right? Could as well just done this. But you know, it doesn't matter because you are looking anyway for a retracement. It's not about the precision, it's about the directional bias. Now then, we have this move to the upside, right? If you want precision, then you need to know Elliott Waves in detail, right? But here you have, again, quick move up, right? So we are ranging a little bit and then you get this quick move towards the upside. Very, very nice. Also supported with some good volume. And then you start getting that grinding structure again. Price is not really going anywhere, right? It's very, very sideways. It grinds towards the upside. Takes the high, takes the high, takes the high. It's just waiting for a retracement to the downside, which eventually you get over here. And of course, a bigger one over here. Now, in this case, maybe you missed out on this move up because, yeah, we have a quick move to the downside. We never here got another range or a bit of a grind towards the downside, at least not on the daily time frame. But if you would analyze this structure on a 15-minute time frame, you will see that price here slowed down before getting the reversal. So on a 15-minute time frame, you could have potentially then looked for a retracement. Did you know this was the low? No. But that is trade management, right? That is trade management. Based on then the structure to the upside, you will know what to do, right? Maybe you have some resistances, you TP accordingly, you manage your trade very nice. Because now in hindsight, you're like, well, that's easy, that's what happened. but it's the theory that you can put into practice with future price action. Trade management does the rest, and that's up to you, right? What is your entry plan? How do you manage your trade? That's, of course, on you. But at least having this knowledge of very basic Elliott waves and looking for those areas of reversal, changing the directional bias, same over here, quick move to the upside. Then you start that grind, right? Take the highs couple of times, perfectly fine. We don't care. You, as a bias, are going to look for price to create a reversal. And with that bias, you can look for opportunities. Same happens here. Quick move to the upside. Also had a nice amount of volume, I remember. And then you get that grinding structure. You take the highs. You're going to be looking for a reversal. Do you know that this reversal goes to 25K and then like that's the low? No, you don't. But what you do is that you take the opportunity and that you manage your trade accordingly, according to your plan and new information coming in. Maybe price was going to do this and then you move towards the upside. Well, you still had a short. Minimum retracement target is by far most commonly the 0.382. So if you have a very quick structure to the upside and you take a fib from the low to the high, you would generally expect at least the 0.382 to be touched, right? But price can go a lot deeper. Same thing here. Look, very quick move towards the downside. You get that like grinding structure again, right? Price is ranging, not really going anywhere, very, very sideways structure. You are looking for at least a little bit of a retracement. Now, is that retracement, like, do you know that the moment you expect a retracement, that's going to be the low and up you go to 100K? No, you don't. But at least you know that, well, probabilities are higher. We are looking for a bit of a retracement, right? And what happens after? Well, that's trade management. And maybe you exit over here and you look for a new opportunity, etc. Any trade you take, you do not know how far that move is going to go. But if you manage it well, right, and maybe you take some new trades, you will make money, right? And that's, of course, the goal as well. Now, it won't always work, as nothing always works. Look, you have a quick move towards the upside, and this is where price starts grinding, right? Tough. Yeah, there is some solid moves towards the downside, but there's no like significant retracement. That one comes over here, right? So in this case, if someone's like, well, you know, we get that grinding structure, okay, maybe you're looking for a bit of a move to the downside, well, that's a loss. But with all the wins that you have, you should be able to offset the loss if you solid risk manage. And then what happens? Price continues. You get a big move to the upside and we start grinding again, right? That is the moment where you are aware, ETF top by the way, that you're going to be looking again for a bit of a retracement and you get a nice move to the downside. Which then brings us to this range over here, right? Quick move to the upside, as you can see, right? Highest amount of volume is in this structure, which is nice. And this is where you start to have a range, followed by another range, followed by, on the lower time frame here, another range. This is where you start to get that grinding structure to the upside, right? After the highest amount of volume in that move. That should make you aware that, yeah, we are looking for a bit of a retracement. And then you have the final move, right? We have the low, bit of a move up, quick structure. Now, the moment this is finished and we start, just look at the structure. During live streams, sometimes I talk about look at the formation, right? Because you have the quick move up and then price starts to show this, as you can see, right? Now, this is typically that grinding structure. You're looking for a bit of a grind, couple of highs, right? And eventually you look for a retracement. In Elliott Wave terminology, you are looking at an impulse. 1, 2, 3, 4, 5. Here you have a couple of 1-2s. Make sure if you want to know a lot more, you can go to my Elliott Wave beginning guide playlist, right? All the information is here, including impulse, multi 1-2, etc. But here you have a few 1-2s. You get a big 3. That's generally that quick move. But after that quick move, which commonly is counted as a 3 in an impulse at least, you look for wave 4s and 5s. And that is the grind that ends your impulse and you look for a bit of a retracement. Yeah, maybe you were going to take that high again, maybe you didn't, right? But your bias is once this range happens, well, we might be looking for a bit of a retracement. You can take a fib from the low to a high, minimum target generally the 0.382, which is touched. If I go to a 1 hour time frame, right, there's so many examples. I personally traded in this range as well. And one of the trades that I took was exactly this, right? So again, a bit of a grind, quick move to the downside, right? Quick structure down. But look here, right? I had a support box here. You can go to my video or live stream on like the 30th of March, right? And we are here talking about the potential of a retracement to the upside or a move to the upside because we have a quick move down. We start to move more sideways. Look at the curvature, right? The curvature of the move, quick. And then eventually you start to slowly get that curvature in, right? So you're looking for price to create a bit of a bounce. Didn't matter if it takes the low a couple of times, you're starting to look for price to move towards the upside. And then not long after, you get this very quick move towards the downside. And then this is where you start getting that nice range, take the low again. That's like your grinding structure. You got to be thinking about, well, it might be finished relatively soon. You get a bit of a bounce. Now, this is, of course, a shorter bounce, but you're still on the right side, which is the goal. Price eventually continues towards the downside. Over here, you can see this very steep structure again, right? Basically creates a bit of a gap, which if you've noticed the structures that I've been covering here in the past couple of minutes, you will see that most of them are very, very quick and create a bit of a gap, right? Like a straight line, basically. And then look here, you start to again create that grinding structure. This is where you then slowly start to get the overlap and the ranges. And yeah, sure, we have a couple of more lows, but you are starting to look for price to eventually create a bounce. So that directional bias is going to flip. And that is what the basic knowledge of Elliott Waves can give you. And this is incredibly valuable for any trading plan, in my opinion. The second thing that I want you to focus on is ranging structures. Once a range is forming, you should be able to identify the probabilities of a continuation of the trend or the potential of a reversal into the other direction. The main question that you have to ask yourself is that range either corrective or impulsive? If the probabilities are higher that the range that is forming is a corrective structure, you look for price to take out the pivot that started the range. If the probabilities are higher that the ranging structure is impulsive, you could look for a potential move in the opposite direction. Many Elliott Wave analysts struggle to count ranges because they can become incredibly complex and there's a lot of different possibilities. But luckily for you, we don't have to be bothered with all of those different structures. We just need to know corrective or impulsive. Once you know that a range has a higher probability of being corrective, you can look for some great buying opportunities during the range as you are looking for price to take out the start of the range. Once the probabilities are higher that you're looking at a potential impulsive range, it gives you an opportunity to look for short positions. Now, a corrective range tends to be very three-wavy. So once a range starts, you tend to be able to see a very three-wavy structure that starts the range, which immediately lets you know that the probabilities are higher that this is a corrective structure, not an impulsive structure. The second element is that in a corrective range, it can happen that price touches the 886 Fibonacci. At least it happens more in corrective ranges than impulsive ranges. Once an 886 Fibonacci is touched, you expect the origin of that range to be taken at a later stage. It is very rare for impulsive ranges to touch the 886, while for a corrective range, it is a lot more common. Lastly, a corrective range also tends to look a lot more messy and be generally longer in time. So you start a bit of a range and it becomes a big mess, quite long in time, sideways. People will call it the bull flag as well, right? And this is something that is quite typical for corrective ranges as well. An impulsive structure, on the other hand, starts with a 5-wave structure. So imagine you have a bigger trend towards the upside and eventually you create a pivot high and you get a retracement. If that first move down is a 5-wave structure, you should be aware that you get a retracement. Now it starts to look like a range, but you expect another 5-wave move towards the downside because a 5-wave structure is never alone. It always needs another 5 waves towards the downside. A great example is here that price moved towards the downside. We create the bear market low. And look at this. You get a move up, a move down. That's your 1, 2, 3, 4, 5, right? So you get a pivot. You can count 5 waves. You expect a retracement. but then you expect another move towards the upside. And that can create a change of the trend. There's only one structure in Elliott Waves where you can get a 5-wave move, but not another 5-wave move to the downside, and that is a flat. And I want to include it here so that you understand what to look out for. So you have that trend to the upside, eventually you create your pivot high, and the first move down is not a 5-wave structure. It is a 3-wave move to the downside, and you will be able to identify this. After these 3 waves, you get a 3-wave structure to the upside, and often in flats, you create a new high in this case. After this high over here, you get a 5-wave move to the downside, and this creates a 3-wave structure, a 3-wave, right? 3, 3, 5-wave move. This is then your 1, 2, 3, 4, 5, and when that low is in, you eventually expect price to later take out that high again and continue the trend. So in this case, this 5-wave structure is single, right? You don't expect another 3 and another 5. Now, from a trading perspective, however, you will still do very well because you will be able to identify this as a 3-wave structure after this pivot, which means that you're going to be buying. Minimum target is going to be that high. So you will be in profit and you'll have a winning trade. Now, price then moves towards the downside. It's very likely you miss out on this move to the downside, and this is just the first 5-wave structure after a new high is formed. And if you are like not really paying attention to the detail here and you identify this as a first 5-wave structure after a new high, and you would look for a bit of a retracement and another 5 waves, and you would go short, then that is likely going to be a loss. But the win that you have over here should offset the loss over here as well, right? So that is risk management. But I just wanted to make sure that I include the flat to make this video as complete as I can. So now let's look at a couple of examples so that you know exactly what to look out for. Starting with this range over here in 2021 September, which shows you a very nice 3-wave move to the downside, and then price moves back towards the upside. This 3-wave structure is pretty much confirmed the moment price over here takes out this high, then you look for price to take out that high, and we continued. And even close to the all-time high, we had this 3-wave structure, move down, move up, move down. Price then moves back up, takes the range is a little bit longer, and then we take out the high. Do you know that this is going to be the little, at least, bull market top? No, you don't. But at least you knew that the probabilities were higher to take out that high, and that is what happened. You can also see that after that high was made, this range over here, right, there's no corrective range. You have a quick move down, little bit sideways up, quick move down, messy range sideways, and you just continue to the downside. So this is where you're starting to look for an impulsive move towards the downside, right? It's very quick, no long doubt sideways stuff. Now that means that as the trend is changing, you can keep an eye on these ranges. If these ranges are corrective, you look for price to continue its way to the downside. Well, we make a low here, and this move towards the upside, right? It's not a nice 5-wave structure, no? 1, 2, 3, 4, 5. We cannot see that over here on a daily time frame, no? We can also not count a diagonal. I didn't really talk about this, but a diagonal is 1, 2, 3, 4, 5. Make sure to check out this video here if you want to know more in the beginners playlist. But that's a 5-wave structure, and then you would normally look for retracement and continuation, but you can't get that here. This is very much a sideways structure, and like a 3-wave structure is relatively long as well, right? You look for price to continue its way to the downside. Then here you have again move up, a move down, and a move up. And I actually wonder if we also touch the 886, maybe we just missed out on touching it. I think just missed out on touching the 886, but nonetheless, when you look at these characteristics, up, sideways up, reverses, and eventually you get it confirmed and price moves towards the downside. If you want to change the trend, then preferably you get a nice impulsive structure. We might miss out on such a move, but then you wait for the retracement, and that is then the potential entry, which is what you see at the low. So at the low here, you get a 1, 2, 3, 4, 5-wave structure, right? after the low is formed. And then you know that after a 5-wave structure, you look for a retracement, but you would generally expect another move towards the upside unless you talk about flats, but that was not relevant over here. Now then we have an 886 touch just before the bear market low was made. Price touched the 886. Probability is higher to take out that low. And you can just dissect all of these ranges and you will get to the probabilities of each range. I mean, look at the range over here, right? We were in this range for such a long time, but look how sideways it is. It's not like we went up and then eventually we moved down rapidly again. Just look at the difference of this and this, right? It's not like we made a high and then a couple and down we go, right? It doesn't really feel impulsive, and eventually you take out this high, creates a very sideways structure, long in time, very much a corrective move. Besides, it's also eventually a 3-way structure, right? This move down was also very slow, right? So it's a very sideways structure. Probability is higher to eventually move up. Now, do you know, again, that this is the low and that you're creating a low over here? No, but it's about identifying the structure, right? Bybit had a wick further to the downside, and maybe on charts, yeah, maybe you were going to move to the downside a bit further, but it's about realizing that the range has a higher probability of being a corrective structure. This was a range that we were in for such a long time. And I made a whole video on how I analyzed this range when price was about here. And I said that the probabilities were highest, that this is the low. And you can find that video in the Things You Should Know About as a Trader playlist. And then it's this one here, the full plan. It will give you like a 2-hour analysis of how I approach a range in detail. So this was in detail, right? But hopefully it's very educational, and you will notice why for me probabilities were higher as this low was made, that the low was in, and we're looking for price to move up. But even without the detailed information, you take the 886 from the first high to the first low, up, that retracement touched the 886. You take an 886 from the high to the low here, right? So you take it from the start of a range, right? Start of a range, that's where you take it from, to then this low, and then you look for the retracement after that low, right? So this one, oh, it touched 886. Now I take it from here to here. So I look for this retracement, which also touched the 886. Now we know that the 886 is very rare for impulsive structures, right? Impulsive ranges. It's a lot more common for corrective structures. So it increases the probabilities that what comes after is part of a corrective structure, and we still look for price to move towards the upside. And that eventually brings us to where we are right now. You can see that just before the all-time high was made, we had a 3-wave corrective structure to the downside, which eventually got confirmed. Probabilities higher to take out the high. Now, the moment that the high was taken over here, these probabilities have played out, and you got to keep an eye on the new structure that is going to form. Now, if we look at this structure over here, also using a bit of knowledge of the beginning of this video, then you can see that we had a quick move to the downside here, right? Quick move down, creating a bit of a gap. And afterwards, we start this range. And look how slow this range is moving to the downside. That's a typical grinding structure, right? Quick move down, and then not much is going on, right? It's very slow. Up, yeah, we take the low, right? Doesn't really matter. It's a very slow move after a quick move to the downside, which was on a high amount of volume. So the first thing I told about earlier in this video very much comes into play, that you're going to be looking for price to create a bit of a bounce. That is your directional bias. Even if you would have taken the low again, it doesn't really matter. You're still going to slowly start looking for price to move to the upside. So buying opportunities become more interesting. And then depending on the structure of the bounce to the upside, we get a lot more information. Is it going to be a very fast move, after which we look for a bit of a grinding structure again? Well, then it's going to be interesting to look for a bit of a reversal. If price is going to create a bigger sideways range, we will be able to analyze that range, keeping an eye on some very simple characteristics. If you want to learn more about Elliott Waves, then make sure to check out this playlist on my channel. It is on the homepage, and it includes every Elliott Wave structure that you need to know about, including all of the detail. In this video, we have covered Elliott waves from a very basic point of view. You don't necessarily need to know all of the details and all of the rules and the guidelines in order to be able to use some of that Elliott wave knowledge in your trading. If you get a very fast move to either the up or the downside, preferably on some volume, and you get a grinding structure, it becomes interesting to look for a turnaround. Now, how does that translate into Elliott waves? That can happen after a wave 3, after a wave C, after a wave Y, right? For example, once you start arranging structure, you now know some of the characteristics that you can keep an eye on to make sure you have a good idea of the probabilities of that range so that you can trade according to the directional bias without knowing everything about triangles, flats, zigzags, and WXYs. I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there, or the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.